Hey, fellow stock cardians, it's Friday, May 14th, 2021. I'm Hoda, co-founder and CEO of Stock Card, reporting to you from a green stock market for the second day in a row. I looked into why the stock market indices continued the upward rally, discussed whether Zoom video communications has reached the bottom, and explored why the Walt Disney company dropped today. All three indices finished in the green for the second day in a row. The news broke that fully vaccinated people can take off their masks even indoors. The market took it as a sign that the COVID-19 pandemic is behind us already and rallied on the news. The rally was despite a flattening of the retail sales in April. It seems that boost from stimulus checks has faded. Nevertheless, investors sent the stock market up, especially the Nasdaq index. Shares of Zoom video communications were up more than 6%. The stock is quite far from its pandemic glory days of $588 per share. Today's price jump, however, came after a few comments and upgrade by financial analysts who believe Zoom's stock has fallen enough and it's now poised for a rebound. Even at $308 per share, the stock is overvalued considering traditional valuation ratios such as price to earnings ratio of more than 128 and price to sales ratio of more than 32. I hold some Zoom shares in my windmill portfolio. I agree that Zoom would continue to stay an essential tool for businesses and consumers now that the pandemic has fast-forwarded the adoption of the technology. The Walt Disney shares dropped more than 2% today. The company released its latest quarterly earnings report. The pandemic has led to the closure of the company's parks and resorts for several months, and the impact on its revenue is still quite visible. The company's park and resorts revenue were down by 44% year over year. Moreover, films and movie releases have been delayed for the same reason, and the impact is visible quite again on the company's revenue. In contrast, Disney Plus and ESPN Plus streaming services remain the company's heroes with more than 100% and 75% annual growth rate in the number of paid subscribers compared to the last year, respectively. Now that vaccination is well underway and fully vaccinated customers can take their masks off, it is not too unlikely that the market celebrates the news by buying some Disney shares when the revenue shows signs of recovery in upcoming quarters. That's it for today. If you haven't already done so, please give a stock card a try and research as many stocks and ETFs that you want. Consider following a few successful investors by visiting the stock pick page on the stock card platform. And you can always use promo code ROLLWITHOURCEO, all lowercase and in one word, to upgrade to our VIP plan after your 14-day free trial. Please help us grow the Stock Cardian community by liking and subscribing and sharing these daily market recap reports with your fellow investors. I really appreciate that, and I'll see you next week.